Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's the day before TGIF. What do we have here today? Let's see, let's get it going. Where's Mr. and Mrs. Mouse? Let's move that over to there. And there's J4X. You can see there's the Swiss this morning, trying to lift up in here. So I guess the dollar is gaining in value again. Common sense says no, but the Federal Reserve says yes. That's pretty much the name of the game there. And you can see it here over on the Chicago Quant. Same situation as we have on the J4X. You can see the lifting up here. You see the lifting up here. And our weekly's still weak. It's still weak. We keep on thinking that they'll zigzag around and maybe they'll come down to a lower part of this trading range. Like we've been suggesting now for a couple of weeks, especially with the in the last couple of months, with what they refer to as transitory inflation, that probably has a few heads confused and where to go and how to set up the range. And now that we see a couple of the central banks, the bigger and more controlled central banks with actual solid equity, or let's put it this way, assets behind it, like the Canadian one, Royal Bank of Canada and Australia and the ECB, we see that there is some type of rumbling going along. The election on Tuesday here in the United States didn't help it any. They have to have even more doubt than ever what to do with Mr. Biden and how to deal with it. Here you go. Traders steamrolled Bank of England flip-flops. Leaves rate unchanged, defying market. See, that's the whole problem. Will they or won't they hike BOE? That's what it came down to. The markets think it was going to, and it's not. And sooner or later, I'm sure all of us have heard the story about the emperor with no clothes. And that's something we as traders have been terrified of since I started in the markets 40 some odd years ago. Back in the late 70s and the early 80s, we were very nervous about the idea that sooner or later the world looks at us and says, you don't have any assets. Fortunately, we do. But what we may not have is respectability and confidence. And that's also a part of the reality of it all. But I guess you could say that the dollar is more powerful than the sword. So in the end result is that we can buy what we need, and if we can keep on printing, which the world seems relatively sanguine, I guess that's a magical word, it's a French word, sanguine, willing to accept, it's okay. That's where we end up in the end result, is it becomes even more confusing. But that's what we are worried about as traders around here, and that is that credibility disappears. And that's what we don't want to see, is the credibility disappear. So there's Middle Age. Hey, good morning, Middle Age. What's he say? A pretty decent recovery from yesterday's sell-off in gold. I know. Is that insane? When I saw that, I was like, oh my God, are they out of their minds? I couldn't believe I saw that. Well, that's why you're long calls. You trade the right product. You trade the binary or the calls or the options, however you want to describe them. Binaries are options. What it is, it's a two-part option. You buy one, you sell another. It's one whole execution. You don't have to do it twice. And you can do that, in options. You can create your own binary, and Dukascopy has binaries. It's the whole bit. It's just the option derivative market in the end. And it's a very safe and smart way to be long, to buy a binary. And and that's something that I know that it's a scary word, and we just had Halloween here in the United States, and I guess Guy Fawkes' day is coming up soon, so that scares people. You say options and derivatives, and you say strike prices and binaries, and all of a sudden people get nervous and they get scared, and I don't like the idea that I have to add 6 plus 8. Next thing you know, you got to tell me that it's not 14, it's going to be like 23. Yes, 6 plus 7, 13, or maybe not. Mystery, eh? I guess that's that new type of math they do nowadays. Let's not think, let's just do. Alright, anyway, we're looking at the Swiss, and you can see the Swiss is trying to lift up on a daily basis right here. You can see we're going to get probably green kicking out of here again. Over on Chicago, we see no dot at all at this point, and we have a volatility dot from yesterday. And you can see on from J4X, we have a little teeny weeny little green there just hiding. And you can see it's been in the buy there, and it's trying to push up. And here we oscillated back and forth. We went into the sell yesterday on Chicago, and now actually you couldn't because we had a red and a green. So it's still in the buy for a third day now, going up, up, and away. All right. Let's check the fact check spreadsheet to see what did we do with that. Did it stay that way? Is it in there wrong? Let's see. It should be a 3. Where are you? Right, yeah, there it is. See this? No, that's Canadian. Oh, we did it wrong. So it should be a 3 there too. Not an E, a 3. There we are. So it's still trying to go up, but our weekly's going down. It's, you know, I don't have a lot of confidence that there's a lot of conviction. That's the magical word, conviction. Middle age. I wish I definitely been stopped out with future. Oh, you definitely would. Yeah, I would have. Yeah, definitely. That's why we talk about that, and that's why we're really happy to have you here. Is that middle age is an options trader like ourselves here, and you know, using binaries and options is a lot safer and a lot smarter and a lot more profitable. Now, if you're intraday trading, it's a whole different game. You can intraday trade these products very well. If you are overnight carrying them, you better have enough capital in there so you don't get stopped out. You know, because if your tools say that it's long and it goes down in the wrong direction, maybe you've mismeasured the way you should, you know, you should be setting up your stops, that type of thing. So anyway, that's where we are. Let's take a look at. I noticed in the euro has rolled over too. So let's check that out. Right there. You see, it's playing with the sell. Went into the buy there yesterday. They had some love for it. Look at it today. It's being pressed down. And there it is right there. Pressed down. So we go into a buy yesterday right there. It's on the fact check. You can see that. Line 14. And today they're going back into a sell again. And you know, we're underneath this is starting to catch my eye. I wonder if we're going to see this out of the 3, out of the Australian currency, the Canadian currency, and the euro currency. They're the 3 central banks that are basically pushing against the Federal Reserve at the moment. They've gone walkabout. So, and now you can see the everybody expected the Exchequer out of London to join in with the other 4, you know, the other 3, you know, with the 3 majors, and they did, and they stayed with the Federal Reserve. So that's probably has to have some question marks going on. You can see there we're banging against the bottom end of that range in the euro. See it there on the Chicago quant chart. It's banging, 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 banging. It does not want to let go. It can't get its legs to get back up again. It's somehow or another it has fallen, and it can't get up. So we'll see. I have to believe that these 3 central banks are doing that because they have to do that financially. They're probably on the ropes. You know, I mean, you can only take someone else's money and spend it for so long. Sooner or later, they run out of it. And when they run out of it, then you don't have any money to take from anybody anymore. And I'm assuming that's what it's all about. And then, was it today's Thursday, right? So was it Monday or Tuesday? Royal Bank of Australia changed its yield target. So they must be feeling it. You know, they want to go back to reality again here, not this fantasy. And they're watching the Americas, you know, Americans in particular, and the swamp has been totally identified. The population knows it, and they're voting with they're going into the voting booths and they're voting these people out. They've had it. You know, this socialism doesn't fit here in America, and it's crazy stuff. And they're doing it. They're wiping out Democrats all over the nation politically. And if they hadn't, squeezed those 3 elections of, Mr. Trump and the 2 Georgian senators, you would think that the Republicans are not winning anything. And instead, they've been winning for like 3 years. They're probably going to pick up 50 or 60 seats in the House of Representatives. Never, ever have we seen numbers like that in I want to say modern times. I'm talking post-Civil War. I'm talking 1866. We've never seen anything like that. So, let's put it this way, traders. Stay tuned, wear a helmet, and put a seatbelt on while you're on the trading desk, because it's going to get wilder and wilder and wilder. All right. Let's see, where do we go from here? Let's go to the British pound. I bet they're really going like, I'm confused. I thought we were raising our rates. Yeah, look at that, smack down, bang. Was trying to get life into it. Now it's still rolling over. Our weekly is on the edge of falling apart. You can see that right there. It is. Where is that at? That's actually at a minus now. We actually are looking at a minus right there. That's what that is. That's a minus. So whatever they were thinking, the marketplace was thinking, they've been stunned. I guess they thought Great Britain was going to join Canada, Australia, and the ECB, and Butkus instead. All right, let's check it out on J4X. There it is right there. So that's just, I don't know how else to say it. We are in magical times. These are truly magical, exciting times. What's it? It kind of sounds like one of those rock and roll songs. Something about money's for free and the chicks are free, or I don't know, something like that. It's one of those 1970s, 1960s song. We'll have to find it, but it's definitely, things are weird. Let's put it that way. Definitely major league weird. All right, let's head over to the Turkish Lira now, see what they're doing with the Turkish Lira today. We're watching the Erdogan policy of devalue the currency and bring in the investors. Where's that mouse up? There it is. First we look at is the dollar Turkish Lira. And looks like it's still firm. Let's push it up onto the Chicago. There, yeah. So we went into the daily buy yesterday right here, and it's holding up firm still. The weekly, that weekly don't even. I guess we should change the silhouette so you can see the green line. I'm gonna make it white like that. There we are. As you can see right there, not even close to challenging the manifold. So, President / former Prime Minister Erdogan is got it running, straight, steady, and consistent. Devalue the currency and bring in the investors. Show me the money, GTN. Get the money. Yeah. All right, and then let's jump over to the Euro Turkish Lira. All right, there. Let's see what she has to say about that. There it is. You can see there, same situation, showing strength, even more strength in this, and as we always say, location, location, location. Obviously, there's way more trade going on between the European Union and Turkey than there is with the United States and Turkey. All right. What else can we say? You can see right here, we are well above the channel at this point, and we keep on thinking we're going to see a 12.5. We might have to do some work and find a new channel for this and see if we can. But when you're in uncharted territory, you just kind of let it flow for a while until it starts to establish its numbers again. But that's where we are with the Euro Turkish Lira. Anybody want to see anything out there? It's kind of quiet this morning. Everybody's getting ready for the weekend. Weekend. Notice I start thinking about it Tuesday. But I start celebrating it by Thursday. All right, from there we'll jump over to Canada, one of the rebels, I guess you could say. The Euro is one of the rebels, and Canada is one of the rebels. And you can see here, it's moving up again for a third day, going on a fourth. And the weekly starting to move. Let's see if it really can. I did see a Trudeau story. Now that I guess, the search engine probably saw that I looked for the election, and since I already know the truth now, I saw a Trudeau story. Something about Trudeau and oil and what was it? It was the climate, that religious gathering they had in Europe for worshiping the weather a couple days ago, where Mr. Biden was there and everybody else was there that are into worshiping the weather. And I guess he promised something that Canada said no. Supposedly, whatever he promised, it didn't go over big in Canada. They were like, no, definitely not. Gold and silver, Doc. Let's go there. Let's see what gold and silver looks like. We usually go there anyway after the Canadian, so this is all right. I'm just going to throw Canadian on the J4X just to give you a affirmation that how we watch it. And then let's go check out, at the same time, we will check out gold and silver. Right. There's gold. Let's put it up on there. There's gold. And it's doing a nice job there. It's trying to lift up. Let's give it a refresh. There we go. And we can even put a green line that is basically right there. It's trying to get into the buy. At the end of the day, if it's still there, then we will keep that green line there. I'm just going to save that. This way I don't have to do it a second time. The weekly has been screaming, and you pointed it out very well, Middle Age. That's a interesting big spike for gold. Let's see how it looks over on J4X. Right there, and that's normally when the Canadian is going up and losing money against the dollar. Usually oil and gold are going down, but not today. It's taking a reverse course of it. You can see here, he's trying to get going, the gold right now. Just starting to perk its head up. Look at it, it's busting, just touching the dash line. It's following in the footsteps of the Chicago Quant. And, it's got we've gone in and out a few times here, but this has got all that red. It's going to start to clean itself up. Try to get some green onto the J4X chart there. Give it a couple hours, and these prices up in here, and it will. There's the gold. Let's see what Mr. and Mrs. Silver look like, but I'm sure it's doing the same exact thing. Oh, yeah. Looking good, Billy Ray. Feeling good, Lewis. Looking nice. So that's got a shot at going into the daily buy also today. Let's see if it holds up in here. And we've got the green going on. The weekly, even with all the crazy that was going on, that weekly wasn't beat up too bad at all. Not at all. Let's check it out on J4X. Right there, there's the silver. And that's the two of those. Looking very firm. Very, very firm. Let's check out oil, and then we'll go back to the South African Rand. Boy, that South African Rand has been telling us a strange story. I'm not convinced what I'm seeing at this point. Let's see, what am I looking at here? Oh, oil. Let's do the oil. And there is light, sweet crude, like honey. Let's put it up on Chicago, right there. Doing the same exact thing, lifting up. You just got to wonder why did they sell down the hard assets yesterday? You know, what was the? I guess they thought interest rates were going to rise, and so that was going to put pressure. So I guess that's why we saw silver and gold and oil and all like that get sold down. And now that the Fed didn't tighten, you know, they're tightening in their. I tell you, I don't even know how to even describe what they've suggested they're going to do, because they can buy bonds without us seeing it. You know, I mean, they lend money to third parties for free, and the third party knows they want them to buy X. If someone hands you $100 million, or just say $50 million, right, and says, you know, I sure wish you would buy some stock with that. How about if I give you $500 million, or maybe just $100 million, and you know, maybe do what you think is profitable. I think stocks look good though. What do you think? And you're not going to get charged. Yeah, we're going to give you that $100 million, and we're not even going to charge you interest overnight. It's for free. And now you got to figure Doc has lost his mind, right? This is all true. This goes on every day. Even Citadel gets like $500 million to $1 billion overnight for free. I mean, you know, this is going on every day. It's documented. Your local media or your national media or your international media won't talk about it. They just keep their mouths shut. And it goes on. So, you know, if they're going to taper their bond buying at the end of each month, who says they're not buying it somewhere else? Your silver weekly hardly flinched during all that selling. Yeah, I know. I was happy about that. I was concerned. I looked at it a couple times. When I saw the gold getting smacked yesterday, I ran over to take a quick look at the silver. And I was like, oh, they barely can move that. And now, oil, on the other hand, you can see, you know, our oil has dipped down. But when it comes to the two metals, and what was curious, we were seeing the weakness in the. I think what we'll digress a little bit more. You can. I'm going to stay on this this concept for a minute. You can see here, this had dipped down. It was at one point it was below the time manifold right there, and then it's back up above it today. And the same thing with the silver. Silver, this started to head down. The green line did start to head down a little bit here, but it didn't really do much damage, and it's just hanging there. Now that I'm curious to look at the platinum, because the platinum has been in a weekly buy, and yesterday when I looked at it, this thing was dipping down, and we had slid into a daily sell like everything else yesterday in the platinum, and you can see today they're trying to lift it back up a little bit in price, but notice the math is not turning. And you can see here when we tighten this up, it has been in a I guess that's a range. Looks like a reverse head and shoulders, really. Let me see if we tighten this up more. It'll look like a reverse head and shoulders. So this is like a bottom. Are they going to go to 1150? Maybe. I don't know. It's really hard to, have conviction about the fundamentals. Someone sent me something about fundamentals yesterday or 2 days ago. I said, I can't wait till when fundamentals come back, where the markets actually pay attention to fundamentals. The funds have to pay attention to them on some level because they'll be sued if they don't. But overall, the fundamentals are, as Janos has said and a few other people around here have said over the years, they've been basically thrown out the door. You can't trade off of them anymore. As we sip more of our tea. All right, let's check out the South African Rand. South African Rand. Rand. ZAR. Or the new Ghostbusters is coming out, so it's ZOO. Alright. Let's turn it on there. Let's put it up on J4X, right? Hey ya! We don't know if it's the Zuma situation or what, and you just don't know with that currency. Now that's a good sign. It's nice to see this thing trying to go down today. It's nice that it's doing that. It tried to get down here and it failed totally. It looks like we are flirting with a daily sell as we speak. So maybe I can put a sell line in there and it'll close there, and then tomorrow morning it'll be easy to say it's in a daily sell. The same thing's happening here. I just have to believe that this will represent the real strength coming in gold in the end. I mean, I just have a hard time believing that. You can see here, you know, it was, that's back in July of 19, no, 20. Okay. You know, I would just have to believe that it has an ability. Let's look at it on JForex on a weekly or monthly. And when gold was at 2,000 or 2,100, was the rand down, you know, down in the 13s and 12s? Let's see. Yeah, so there's like 2000, let's see, that's 2018 in January. You know, it's down that low. Now let's take a look at gold in 2018. Here it comes. Yeah. That's July of 18. That must be, that's April of 19. So right there. Yeah, so you had the South African rand when gold was at where was, oh wait a minute, no, there it is. There's the high in gold. So the high in gold was the new all-time high? Let me see. Where's the new all-time high? I guess that's it. So the new all-time high was in June of 2020. Let's look at the South African rand in 2020. June of 2020. There's May of 2020 right there. So, you know, that was the high. Okay, so the rand wasn't really following along. You know, gold was going down and the rand was losing against the dollar. I guess there isn't that much a correlation to it then. So when this rand fell here, what did gold do? It fell also, right? That's exactly what it did. It fell also. Whereas we would think that the currency would get more valuable. Let's try it again. We would think that the currency would get more valuable when gold goes up, but it doesn't. When gold goes down in value, the rand actually picks up value. And that's curious. Very curious. All right, so it's doing what it's supposed to do. So as the rand rises, let's go back to the daily. So with the rand rising, it's telling us that the potential for more expensive gold. I guess that's the way it works. As it loads in the daily here. There it is. So if this is going down, then gold is going down. If this starts to go back up again, then gold is going up. And that's what we've been seeing with this rise. You know, this low here in, is it right there? This low in late September, and it rose, and that's gold. So let's look at the rand. Where's late September? What's that? No, that's curious. So it goes down in value as gold rises. I don't know. Somehow or another, it looks very confusing to me. It could be the Zuma situation down there. Who knows? I try to interpret it that way, but some of the evidence is not making it very clear that that's the truth. End result is we'll watch our math instead. That's the safest and best way to trade, is following our math, be it through the J4X tools that we've developed or the Chicago Quant. All right, from there, let's take a look at the ruble. right there. There's the ruble. It's starting to roll over also. But just holding on by the hair of its chinny chin. And look at that weekly. Trying to get through the time manifold now on the negative side. I guess my analogizing with gold and the South African rand is very confusing. At least it is to me. It's better to just follow the math. Follow the math. Following the lead, the lead. Okay, so you can see right here, ruble trying to rise. It's starting to break down. You can see the line doing it. The Hinky Ashley will have to catch up a little bit. But you can also see we're in a green dot there too. So it's the Hinky Ashley is doing fine. Our line is doing fine, going like, it's trying to touch the zero line there. And this is trying to touch the dotted line there. All right, from there we go over to the yen. Yen. Dollar yen, right there. All right, so you can see here, yen is kind of ups and downs. We talked about this yesterday. It was acting very strange compared to the norm. I guess they would like to join in too with the 3 out of the 5 or 4 out of 5. I don't know. This is going to be a story I can't wait to see the end of, and that is, what the central banks are trying to do in those 3 countries versus the Federal Reserve and the Exchequer out of London. And let's get the yen up here, right there. Wow, went into the sell. It's just hanging underneath it. It's a red and green there, so it was kind of trapped. So it was really still in the buy. Now today it's trying to push itself into the sell. And you can see here the weekly is still holding up pretty well. The super is falling down. You can see it's trying to fall down, but overall everything is staying way above on the time manifold. All right, next place to go to is the Mexican peso. Wow, when I shut this down last night, I was looking at the peso. I was like, wow, this thing is climbing. There you go. The peso in there. Ooh, did they do a smack down there? So I guess they thought that interest rates were going to rise here in the States. That might be the anticipation by a lot of central banks, and maybe that's why they've gone on their walkabout. Everybody, and they thought, you can see the complaints that are going against the Exchequer today. Why they didn't tighten? What's the issue there? What's their problem? Well, maybe their economy's not growing enough for them to want to tighten. Remember, some of the fundamentals actually do have influence on everyday life. When you have socialists running financial systems. Speaking of which, Mr. Biden was trying to put this communist into a position to control the banks in the United States. She's up for review in the Senate, and everybody's scratching their heads because she wants to get rid of the private banks altogether, like Citibank and JP Morgan, get rid of all private banks and just connect it up to the Federal Reserve. So people are kind of scratching their heads, like, she's a devout communist. You can't make this stuff up. It's amazing. I mean, this is real. Nothing I say when it comes to these situations, be it the Federal Reserve lending like Citadel money overnight for free, or, this is all real. It happens. Just because the media won't talk about it doesn't mean it's not happening. I guess it goes under that category of if a tree falls in the forest, does it make a sound if no one's there? You ever hear that expression? If a tree falls in the forest and nobody is there, does it make a sound? Yes, of course it makes a sound. I guess the bigger question is, does anybody hear it? Well, if no one's there, how can they hear it? But yeah, I think that's like an absurd thing there going on. And I expanded the ellipse, that we have around the Mexican peso. Because I just don't think it needs to be started as a new one because we're still in that weekly buy. So it's just getting bigger and bigger, compared to the other two that when it took off in the weekly buys and then fell apart. This one, it's not falling apart. It's holding up. Keeps on trying to challenge the zero line and it turns back up again when it comes to the Mexican peso. All right. I'm going to jump away from the currencies again. If anybody has a currency they would like to see, just shout it out. Shout. Shout. What it's about. All right. So let's take a look at copper, the metals complex. We'll finish off the metals complex here. Look at copper. Right there. In a sell there, and the weekly is bouncing and trying to get back into the weekly buy at the same time. So we're seeing some real positive action all week long in that, and it would be nice to see the daily get some legs in it and get going up also at the same time. So there's the four metals that we look at: the copper, the platinum, and the silver and the gold. And we'll see, we got the copper trying to lift up again. Now, Robin was talking about that story from last week to me this morning about how the London Metals Exchange, people are taking delivery and squeezing the LEM, LME, that's it, London Metals Exchange, to take delivery. And they don't have enough inventory to give delivery, and that's the problem. Robin was asking me this morning, you think they'll do the force de jour? I was like, I don't know. I guess what they'll do is, the Federal Reserve can basically tell people, we don't want to upset anything. We just want to, just kind of, want to just kick back and keep things quiet. We don't want people, don't look behind the curtain type of thing. And so, that's why they give $1 billion to Citadel or $2 billion to trade overnight for free. That's a hush money. And they do that to dozens and dozens and dozens of other companies. And so imagine somebody at the London Metal Exchange needing to exercise into copper. And Pal probably gets on the phone, calls him and says, do you really need that copper? Yeah, we can find you some copper in a couple of weeks. Do you need it now? If you don't really need it now, then let it be. We don't want to declare a force de jour. We just want to be quiet about it all. We don't want to think too hard. We don't want people to get nervous. And that's the attitude I take of what I think they're doing. I really do. I think that they are trying to control things. So when, the Royal Banks of Canada and Australia and the European Central Bank kind of go on a walkabout, they were trying to anticipate the tightening of what the Exchequer and the Federal Reserve was going to do. And obviously the Federal Reserve didn't do it, and the Exchequer was the fifth to do their announcement. Everybody thought they were going to join in this morning, and they did not. So, this is a very controlled environment financially, and it keeps everybody kind of quiet and happy. In the sense that the Fed will just give you more money to keep your mouth shut. Say, look, if you don't really need that, and you're only moving it because you're nervous about taking delivery, and you don't think that it'll be deliverable in 3 or 6 months, don't worry, we guarantee you. And sure enough, I'm sure they'll find somebody that has it in an inventory somewhere, and the Federal Reserve will make a marriage, just like they married Merrill Lynch when it was basically bankrupt into Bank of America, or they took Wachovia and married it into was it Wells Fargo? Just the same way. And Bear Stearns married right into JPM, and the sweetener on that one was beautiful. $1 billion brand new building down in Lower Manhattan too, for free. They threw the building in for free. I mean, they could have forced the Bear Stearns to sell that $1 billion building and take in some cash, but obviously they were so deep in the hole that $1 billion couldn't save them. Can you imagine that? You're in that much trouble that $1 billion cannot save you. That's how bad the world economy had gotten. $1 billion meant nothing. Nothing. No wonder they throw around. I put a stat out. I guess I posted something on the Facebook. It's very interesting. I think I'm gonna find it, and what we'll do is we'll take a look at that, because it basically shows you the relationship of money today in our world. Let me go find it right now. I'm going to throw it up on the screen. And let's see, there. Nothing up my sleeve. Here it comes. There we go. We're almost there. Getting closer. It's coming up. I'm disconnecting it from the screen and going from there. Here we go. Where is that? Thing's acting weird this morning. Why am I having issues here? It shows what a billion is. And it's a very interesting stat. Where is that at? Why can I not find it? Alright, I'm gonna minimize something here and go check it out somewhere else, see if I can find it. Ah, here. No, that's not it. There it is. I found it now. So what I'm going to do is I'm going to share it again. And then I'll be able to show it to you. Post. Alright, here we go. This is a fascinating stat. There we go. Yep. How do we move this up? There we go. Check this out. How much is a billion? A billion seconds ago, it was 1959. A billion minutes ago, Jesus was alive. A billion hours ago, and our ancestors were living in the Stone Age. A billion days ago, no one walked on Earth on 2 feet. Now this is the one that really gets you, right there, the bottom one. $1 billion ago was only 8 hours and 20 minutes at the current rate of government spending. Yeah, that's what that's all about there. That's exactly what's going on there. So $1 billion ago was only 8 hours and 20 minutes. A billion seconds ago was 1959. And a billion minutes ago was 2,000 years ago, in the era of Jesus, you know, the beginning of the whole thing there. And a billion hours ago was the Stone Age. And a billion days, no one was even on Earth. So $1 billion lasts about 8 hours and 20 minutes. I thought that was very profound. Definitely very sad too. All right, where are we at now? So we just finished off the currencies. We just finished off copper. Let's go check out the energies. Let's see, there is crude oil. We've looked at that once already. It's bouncing back again. They probably thought that, interest rates were rising. They expected the Federal Reserve to raise it up. Do something, pretend that they care. But they've gotten to a point now where the emperor may not have any clothes at all. Sooner or later, that's going to have to play itself out. All right, let's take a look at natural gas. Nat gas. There it is right there. Natural gas is basically $5.70 here in the States. I understand it's trading in Europe in the 30s. $30. Yowzer, what an arbitrage that is. Here it is on Chicago Quant. Doing the same thing. It's got the greens going on just like on J4X. And a daily buy for a couple days. Where's our bottom line here? It's just going back into the daily buy again today. There, for us, this is our third day on the Chicago Quant side of it. And the weekly is trying to turn up, but we're still just a little bit underneath. Still, it's battling to try to get going again on the natural gas there. Then let's take a look at heating oil, the other tool that's needed during this time of the year in the northern hemisphere. And you can see that didn't go, and that's 3 days in a daily buy, and it's flirting with the weekly sell at the moment. This is I think this is the January contract, so which is taking delivery in December, and we are in November right now. So I threw that in there instead of looking at the December contract, which is delivered in like 3 weeks. And you can see this thing is pushing way up like it did here, and it just might keep on riding again and get going. May make a higher high. Excuse me, let me take a sip of the tea. Exacto presto. Now, let's see, what's the next thing here? I guess that's the three energies that we follow. So that's the three energies. All right. From there, we drift over to the stock indices. Let's see what's going on there. First one is, let's take a look at the Dow Jones Industrial Average. You can see that right there. It's hanging up there. And daily buy, been in a weekly buy since the beginning of October. And the Dow has gone from 34,000 to 36,000. So it's gone up 2,000 points there. And then let's take a look at the Dow on J4X. Where's it at? Right there. Is that it? That's it. And just marching along. 36,161. That's the, I think that's the spot. You know, that's the index itself, and what we're looking at here is the December contract, which is trading at 36,076. So it's discounted because if you own the spot, you're getting dividends, and since there's minus interest rates, you have to kind of put those two together. You know, the arbitrage. That's how traders act. I mean, derivative traders do that. You know, they don't let free money get away. So. That would be free money if they traded it at parity with, with the index. There was a point, I think it was 1985, 86, when the stock indices for the first time, after a good 3 years of trading, went minus. And people were trying to figure out, what does that mean? In other words, it'd be like trading an option for free, no premium. And so people were thinking, maybe bear markets, they trade the discount, the futures discount minus, and then in bull markets they put a premium on it, supply and demand. But it's more than that. It's a cost to carry. So in other words, if you buy all the stocks and you sell the future, right? So in other words, you see the future right here, it's discounted. So what you have to do is you buy the future, and what it'll do is and you sell the stocks, they will meet. And that's the interest rate. That's that, Doc used to talk about it, a synthetic bond. That's what that is. And so what it tries to do is it follows at the 3-year rate. Not 3-year rate, 3-month rate. Because, when it expires in December, the third week, then the next one is March, and there's 3 months to that. So what they'll do is they will discount that. So in other words, right now, let me just go see what the price is for the March contract. I know I can find it around here somewhere. All right, March contract. So December, let's see, indices, Dow Jones. Nope, okay. Futures. Indices. There we are. All right, so December futures are trading right now. You can see them on the screen there. They're trading in the 30s. And it's trading at, what is that, 30, 36 is offered, 35s are offered, 33s are bid for. It's right there. 34s are bid, 35s offered. It's quiet. Now, the March contract is trading at 359. Where's that? 359.57. So it's discounted. So in other words, as you see on Dukascopy, the actual index is trading at 36,148. You see a 52 offer. Now you see a 54 offer in the green in the box there. You know, on the J4X, you see 53s are offered at 53. Now you see 54s are offered with an 09 offer, 54.09. Now 53 again. Okay. You could buy the March contract, short the stock, right? Buy the contract, and the contract is trading at 35,957. It's discounted. So it has was that that's 43. That's basically about $200 discount. That's because of the interest rate. So in other words, if it was trading at parity right now, and you weren't paying attention to the arbitrage or the derivatives, they would run it at a premium, but they can't because that would be free money. So that's why they do that. All right. Let's see. If anybody has any questions on that, we can get deeper into that. But just trust me, it's a mechanism that keeps fair values to the interest rates for 3 months. If it's a 3 month, it's 6 months. It's going to be discounted the same way to the 6 month bill, so forth and so on. And they do that on all products. That's why there's premiums and discounts to these things. Contangos, they like to call it. All right. Let's take a look at the where is it at? Let's take a look at the S&P 500 right there. The same thing goes on with that. Let's put the S&P in there. And so you can see here the 4,667 is the offer, and that's 7 points at $25 a point. That's so $25.7. It's $175 to maturities. If you short the future, short the stock and buy the futures. Because it's trading, it's basically discounted. The future contract is discounted. It's cheaper. So you can see here the strength that it's been in. Both of them are lifting and lifting and lifting. We've been in a weekly buy in that. You can see since the middle of October. And the product has gone from the 4,400 area to the 4,662 area. So, and that's what us option volatility guys do. We play the volatility and the discount and premium. Then, last but not least, we drift over to the Tech 100, which is like the granddaddy of them all now. At one time it was not, now it is. The NASDAQ exchange trades 5 times more than the New York Stock Exchange. There was a time where it was the other way around. The New York Stock Exchange traded 5 times more than the NASDAQ. So they trade at best maybe 1 billion shares a day at the New York, and they trade somewhere on average about 5 billion over on the NASDAQ, National Securities Dealer or something, another exchange. It's the electronic exchange. And so here we are there. You can see this. Let's put this in there. We got that there. You can see the same thing, lots of strength. You see we've been in a weekly buy since where is that? The 15,000 area, and now we are trading over the 16,000 area. So over the last month, it's gone up over 5%. It's moving along just fine, and there are just more buyers and sellers, and that, like I said, they give the institutions free money every night to buy this stuff, and they lend it to them for free. And I believe they will do smart things like not lose it. Like, oh, I think I'll fade the Federal Reserve. They're going to give me $1 billion. Let's go short. You want to stay in business? No, I'm sure they have I wonder if they have a Federal Reserve jail. Black opted and connected with the CIA. Who knows? It's somewhere else. But anyway, that's how that rolls. That's how the discounts and the premiums work. The contangos, as they like to call them. And what else we got going on here? I guess that's about it. We're kind of at the end of the barrel here. Anybody want to see anything else? We got about a minute. So if not, we're going to get out of Dodge here, and then tomorrow is TGIF. And I guess we got to come up with a title for this thing too at the same time. Yeah, title. What should we call this webinar today? I mean, it was kind of funny how they didn't raise rates. To tighten or not to tighten is the question. I think that's what it really comes down to. And gold and silver have shown today that it doesn't really matter that much, does it? Gold and silver lifting with no tightening. I think that's pretty much the title of this today too. It's all based off of the interest rate structure, and they just won't let go. And that's what we're showing you with the stock indices. Where the discount, where you can see that it's free money. You short it, it's more expensive than buying the future contract that protects you. So gold, silver, lift after no tightening. I think that's what it really comes down to, which is pretty freaky, I guess you could say. There you go. Doc from North America saying, happy trails to you until we meet again. That'll be TGIF tomorrow. Happy trails to you, to all our trading friends.